Are you thinking about buying your first home? Whether you're just starting to browse or you're ready to make that move, this video will give you the clarity and confidence you need to avoid common first-time buyer mistakes. I'm Rick Guerrero. I've guided hundreds of families through the mortgage process, and I have personally bought 9 homes in my lifetime, and I currently own 7. So I'm not just speaking as a mortgage lender, I'm speaking as someone who's been exactly where you are. I wish I would have been given this advice 20 years ago. I would be so much further in life and a lot more wealthier. Buying a home in today's market can feel like you're stepping into a game where everybody knows the rules except for you. Between the interest rate, the media panic, and conflicting advice from friends and family, it's easy to feel stuck or overwhelmed. So today, I just want to simplify. I'm going to break down the 3 biggest things you need to watch out for when buying your first home. Whether it's this year, next year, or you're still just dreaming. These are the same exact principles that I used when I buy for myself from years of my experience. So let's cut through all the noise, keep it real, no fluff, no BS. And here's a strategy that actually works. So tip number 1, the list price. The list price is not the market price. This is one of the biggest mistakes new buyers make, is assuming that the list price of a home is what it's actually worth. And it's not. The list price is just the seller's opinion of the value of the home. It's wishful thinking, not a market validated figure. So how do they come up with this number? There are 3 pricing strategies sellers often use. Number 1, they list high to leave room for negotiation. Number 2, they list at market to attract serious buyers quickly. They want to sell. And list number 3, they list low to spark a bidding war, get multiple offers. So to get real here, some sellers think their kitchen backslash from 2009 adds $30,000 of value. But unless the market agrees, it doesn't. I once had a Brazilian friend that had some beautiful Brazilian tile in his home. He was sure that it was going to increase the value of his home $30,000. It didn't. You have to figure out where that listing fits in. So that's where your agent, if you were doing your own research, you need to pull comparative market analysis, CMA. This means looking at similar homes called comps, comparables, in the same neighborhood that have sold in the last 3 to 6 months. I always lean on realtors myself to determine the fair price. The realtors I use always know best. So when analyzing comps, pay attention to these things. Pay attention to the square footage of the home, the lot size, the number of bedrooms and bathrooms, the year built, condition and upgrades, school district ratings, proximity to amenities or nuances like parks or freeways. Here's an example. I had a client who was eyeing a 4-bedroom home listed at $520,000. But when he ran the comps, we found 3 similar homes that had recently sold between $480,000 and $495,000. That meant the seller was overshooting. So rather than walk away, we made a strategic offer at $490,000 and included a strong pre-approval letter. The seller counted at $500,000 and my buyer got the home they wanted, still saving $20,000 from the original list price. In another case, there was a home priced at $399,000 to attract attention. The comps were around $415,000. We offered $405,000 and won. Why? Because we understood the strategy. The price was just the bait to spark emotion. This is why you can't treat that list price like the sticker price at a store. It's just a jumping off point. Even in the seller's market, there's negotiation to be had if you know what you're doing. And again, critical to have a realtor that knows what they're doing. I also keep an eye on days on market. A home listed for 45 plus days in a hot market usually means one of 3 things. Overpriced, there's a hidden issue such as location, layout, or condition, or the seller is just unrealistic, which is very common. I once helped a buyer secure $25,000 discount because the house sat for 60 days and the seller was tired. He used timing as a strategy, or we use timing as a strategy. That only works when you understand how days on market affects the urgency. And one last thing here, never assume the list price has anything to do with the appraisal value. Because if the home doesn't appraise and you don't have a contingency in place, that could fall back on you financially. Always ask your lender, what happens if the home appraises below the contract price? Tip number 2, you have a lot more power than you think you do. A lot of first-time homebuyers approach this process like they're doing everyone a favor by staying quiet and not asking questions. Here's the truth. You're the one holding all the power. You're making the purchase. You have the money. You're writing the check. Without you, nobody gets paid. So speak up, ask questions, and shop around. Let's talk lenders first. Most buyers think, well, I bank with Wells Fargo, so I just use them. Wrong move. Your interest rate, closing costs, and speed of service can vary massively from lender to lender. Here are the questions you need to ask the lender. What's your current rate for my profile? How much are your origination and underwriting fees? Can I get a lender credit? How fast can you close? Do you offer a float down option if rates drop after I lock? Many lenders don't offer that. Can you walk me through the full cost of this loan over 30 years? Now, for interviewing realtors, your real estate agent should be your advocate. Don't just hire your cousin because they passed their license exam last week. Hire a pro. And here are some questions you should ask. How many buyers have you helped this year? Do you work with first-time home buyers? What's your availability for showing? showings? How do you approach a bidding war? Will you educate me throughout the process? Can I call you after hours if something urgent comes up? Remember, you're interviewing them. This is one of the biggest financial decisions you will ever make in your life. Don't just work with someone just because they're nice or they're cute. For example, I worked with a couple who came in thinking they had to accept whatever the lender told them. I encouraged them to get 3 loan estimates. Not only did they end up saving over $4,000 in closing costs, but their monthly payment came in $127 lower from comparing offers. Another buyer, Michelle almost went with a lender who offered a lower rate, but hid $3,500 in fees. So we sat down, we went through her LE line by line, and we found out the lender was charging her half a point to get a lower rate. We switched, avoided the hidden costs, and closed early. So you want more leverage? Have your documents ready early. Your pay stubs, W-2s, tax return. The faster you move, the more seriously the seller will take you. I once had a buyer beat out a higher offer simply because their paperwork was in and they could close faster. So I'm going to give you a pro tip for my years of buying homes. Pro tip, having a pre-approval with all your documents turned in is great, but if you have some extra time, like a week, ask your lender to submit for a TBD underwritten pre-approval. This will allow your pre-approval to be underwritten by an underwriter, which makes you an even stronger buyer and will help you close even faster. Tip number 3, tune out the noise. Now, this one is the hardest. I get it. Everyone is an expert. Everyone has an opinion. I've heard this before. You should wait for the market to crash. Rates are too high. Don't buy now. You'll get better deal next year. Does it sound familiar? Here's the thing. None of those people know your life, your finances, your goals. Stop letting them influence your time. I get it. I was personally a victim of it. I had a coworker that told me having rental properties was crazy and a waste of money. I listened to him for several years. Once I stopped and listened to somebody else and started buying properties, my wealth exploded. I wish I knew then what I know now. But here's what really matters. Can you afford the monthly payment based on your income? Do you have enough saved for the down payment, closing costs, and emergency fund? Do you have a reason to buy? Like wanting a stability, a safe neighborhood, or building equity instead of building your landlord's equity? That's it. If you check those boxes, here's an example. One of my buyers, I think her name is Susan. She was a single mom who had been renting the same place for 7 years. Her rent had increased 5 times. She could afford a mortgage, but everyone told her to wait. She decided to ignore them. We got her into a home, and now she pays $300 less each month with a locked-in fixed rate. In addition, she's now building equity. She bought this home 6 years ago, and at 6 years ago, she paid $420,000. Today, the home is worth $915,000. Listen to this. That's a gain of $82,500 a year in equity. Another client bought it in early 2023 when rates were 7%. We used seller credits to buy down the rate, locked in a great deal, and then we refinanced them into the 6s and instant equity. So this is long-term thinking. The truth is there is no such thing as perfect timing. There's only personal time. Make your decision based on your readiness, not the news headline. You don't need to be a market expert. You need to know your numbers, your priorities, and your comfort level. It also doesn't hurt to watch a lot of my content to educate yourself. I've done it several times. Bonus tip, own the process, but don't do it alone. The process is long and detailed, but it doesn't have to be overwhelming. Here's what a typical timeline would look like. Week number 1, you get pre-approved, you hire your realtor. Now, if you're in Georgia, Texas, South Carolina, North Carolina, hit me up. I've got a list of top realtors in all the different markets in those states to work with. All solid. Weeks 2 through 4, you're going to start searching for homes and making offers. And the realtors are going to be searching for the homes, not you, so don't worry. Week number 5, go under contract, start inspections and appraisals. Week 6 through 7, finalize the loan and clear the condition. Week number 8, get your clear to close and sign paperwork. At each step, ask your questions like, what's next? What's my responsibility? Is this typical for this stage? Are there any red flags I should be watching for? Communicate often with the lender. Don't ghost them. Don't assume your agent knows what you're thinking. Be active and present. I set a weekly call on my calendar with all my clients so we can speak every single week. And remember, it's okay to pause. If something doesn't feel right, take a breath. Clarify. Ask again. You're not buying a couch. You're buying a roof over your head and a building generational wealth. This is the biggest financial investment you will ever make in your life. So ask lots of questions. Don't be afraid. If this video brought you some value, please hit the subscribe button, drop a comment below, and let me know when you're thinking about buying your next home. I would love to hear about your journey. Share in the comment. If you want help strategizing your next steps, whether it's understanding your financing options, finding the right agent, or just getting your timeline clear, book a call with me. Let's connect. Follow me on YouTube or connect with me on Instagram. My name is Rick Guerrero. Thanks for watching.